emergency issue that we need to take hold of? Okay, hearing none. Then we'll move on to our first item for discussion, 4.1, the investment of management service presentation. And we have Mr. Don Penner and Mr. Christopher McCary from Chandler Investment Services to address this. So could we have those gentlemen start? I don't know who wants to start first.
Go ahead, Crystal.
Thanks, Dawn. So I thought maybe we would start this whole thing with just a little bit of background, Alice, if you wouldn't mind.
That would be great.
Okay, thank you. So through Finance Committee for quite a while now, I know Dale's familiar with this, we've talked about at one point, at what point would Tahoe Forest look to an investment management service. And with our local agency investment fund with the state of California, we have been capped at $65 million for what we can invest with LACE. And beyond that, we've been using a sweep account with US Bank to try to get some interest earnings. And since Tahoe Forest has now exceeded 70 million, which was kind of the mark for when we felt we had enough cash available that working with an investment management firm would make sense. So between LACE being capped and us being in excess of $70 million, it was now time to really look at an investment firm. So Harry and I both participated in interviews of at least 3 firms, Chandler being one of them, Fiduciary Trust being another, and Higgins Investment was the third. We spoke to both firms a couple of times and interviewed them to see who we felt was the best fit for Tahoe Forest, had an appropriate fee associated with it. And through that, I wouldn't call it a full-blown RFP, but through that process, we ended up selecting Chandler. Chandler and Fiduciary Trust also came to us through ACHD and CHA as firms that have worked with district hospitals. So they did come with a caveat that they were very familiar with district hospitals. And so through our interview process, we ended up selecting Chandler. And so today we've asked Chandler to present to the board of directors to give you some background on their firm, who they've worked with, who our team is going to be that we will work with, and also gave you the opportunity to review their agreement. We don't expect you to take action on that agreement, but I wanted you to be able to at least see it. And then we'll also review our investment policy, which Chandler helped us to modify to as current as possible, and to also approve a resolution that allows Chandler to work with both Harry and myself to make investment decisions on behalf of the district. So that is what is planned today. And at this point, I would turn it over to Dawn and Chris for them to go ahead and do their board presentation to give you some background on their firm.
Great, thanks, Crystal. First and foremost, thank you very much for the opportunity to work with you, to be with you today. We're pretty excited about moving forward with you guys. I know that you have a copy of our presentation. We were thinking about sharing the screen and just kind of walking through the presentation, if that works for everybody.
That would be
Dawn, will you be sharing or will Chris be sharing? So we make sure.
I'll share the screen.
Okay.
And walk us through. And I'm hoping you're seeing that. We got it?
Coming up. Got it.
Perfect. Yeah, so Chris and I we'll walk you through. I'll talk you a little bit about who we are and what we do. And Chris will talk a little bit about the investment approach and then some of the work that we put into looking at your investment policy and some of the recommendations that we made to just to kind of shore it up and bring it up to concurrent California state code. You asked about the team, who will be kind of your primary points of contact, and this is us. Oh, Chris, if you want to take a second to introduce yourself.
Sure, thanks, Don. And I want to reiterate what Don said and just thank everyone for allowing us the opportunity to present today. My name is Christopher McCary. I'm a senior portfolio strategist with Chandler Asset. I'm a member of our investment management team. I've been with Chandler for next month, it'll be 8 years. I've been in the financial services industry for over 20 years, and I've attained my accredited investment fiduciary designation. Just from a little personal background, I moved out to California in 2005. So I've actually been out here for over 16 years, most of the time in San Diego, 2 years up in Northern California. But I am originally from Philadelphia. I lost my accent a little bit, but it's one of those areas where I really enjoy being in California, and especially working with a lot of our clients, public agencies. And my focus is to be able to sit there and be a key link between our investment management team and our clients to be able to present to boards, city councils, going through different levels of education, talking about our portfolio management process, the market, et cetera, with that. But I enjoy meeting with everyone today and look forward to working with everyone too.
And again, my name is Don Penner. I'm been with Chandler for a little over 11 years, been working in the industry for about 20. I reside in Northern California, working out of my home right now, but we have an office in Walnut Creek, and that's where I work out of, and cover client service and marketing in both kind of Northern California area and across the country. Bill Dennehy, who is our deputy chief investment officer, and has been with Chandler for a little over 10 years. He will be the person who has primary responsibility for investing your portfolio on a day-to-day basis. However, we use the term team a lot at Chandler. He's a part of an 11-person investment team that will all kind of know and understand that you are a client of ours and understand what we are trying to accomplish with your risk and return kind of goals in mind. Stacy Alderson will be somebody that you work also very closely with. She'll help walk through the rest of the onboarding process and get kind of the paperwork taken care of and all the signatures aligned and that. She's is great and been in the industry for 23 years. And we all rely very heavily on Stacy and will be a key contact for you going forward. So just a quick little bit about Chandler. As you see, we've been in business for a little over 23 years now, or excuse me, 32 years now, and have always really focused on working with public agencies, special districts, district hospitals. And in fact, one of our first two clients was Grossmont Hospital in San Diego. So we've got a long history working with them and continue to work with them to this day. They've gone through a number of iterations and are now part of the Scripps, the Sharp organization, and they are one of our largest clients today. As you see on the right hand, that donut chart there, we manage just under $23 billion. And the vast majority of that is for public agencies. So that early focus that we had on working with public agencies kind of continues through to this day. 18% of those assets that we manage are for about 9 different health care organizations. Currently, we have a total of about 180 clients at this point. Kate Chandler actually came from the public side as well. She was the finance director for first the county and then the city of San Diego. So she's got a 40+ year background in working with public agencies. From the customized investment program. No two portfolios are alike. We've done some work with your investment policy, and that is very specific to your needs, your return goals, and exactly what you want to accomplish. So we are working inside of that, and are always very conscious that your needs are unique to you, and we manage the entire investment program around your unique needs. Real brief on the investment team. It is a group of 11 and likely 12 or 13 by the end of the year. We are a growing firm, and are adding folks as that growth demands. Everybody who manages portfolios is sitting at a desk in San Diego soon, again, when we reopen. So all of the portfolios are managed right out of our headquarters there in San Diego. Very tenured staff, many of whom have worked together for a number of decades. So it's a good tight group of folks that have the expertise that you need. Talk a little bit about our investment approach. What this slide kind of shows a high level of the scope of services that we provide, and what the takeaway from this would just be that we aren't here just to manage your portfolio, trade some bonds, and get out of the way. We really want to be a resource to you, extension of your staff. Work very closely with Crystal and the team to ensure that the tenets of safety, liquidity, and returns are really kind of embedded in everything we do. Some of the really important things that just point out are monitoring compliance with your investment policy and state code. That's one of the kind of the cardinal sins of what we could do would be to get you outside of state code. So we've got a number of systems in place to ensure that doesn't happen. Training of staff, meeting with you. We are available to you, as needed, when needed. We do have a number of publications that we set out on a weekly, monthly, and then kind of on an ad hoc basis with white papers on topics that are important to public agency investing. And finally, I just point out our online portal. We'll sit down with Crystal and their team and walk them through this tool. It's something that we're very proud of and have continued to develop and improve on over the years. But that gives you really kind of full 24/7 access in real time to your portfolio, the information and the data that you need. Chris.
Perfect. Thanks, Don. And so kind of what Don had said is that, and I kind of want to reiterate, is the fact that we view ourselves as an extension of your team. And when we're talking about building out an optimal investment program, we actually view portfolio management as risk management. So it's not just simply, as Don alluded to, just going out buying some bonds and calling it end of the day. It's a part of an entire process. And that process starts with reviewing the investment policy, which is something we've already done. Kind of making sure that we make recommendations to make sure that the policy is up to date with all current changes and iterations of code, but also with related to best practices, industry best practices that we see. Once we've reviewed the investment policy, then having a discussion with staff to understand what the cash flow needs would be. What is the liquidity component? Do we need to be able to sit there and align specific investments to specific cash flow needs? And we work with a lot of hospital systems that we can sit there and do planning relative to CIP projects as such, to be able making sure that we're meeting those cash flow demands. And then from that, understanding and putting together a strategy, understanding what the risk measures and the risk characteristics that the district will be comfortable with, that you as a board will be comfortable with, and working with staff to be able to develop a strategy, not only to meet the goals and objectives, but also making sure we're maintaining that safety, that liquidity, those tenets of a conservative fixed income portfolio for an optimal investment program. And then finally, doing the active management. So once we've developed and put together and having a discussion where we enhance the investment policy, understand the cash flow needs, putting together a strategy, then it comes down to getting our hands dirty and doing active management of the portfolio, understanding and managing the strategy relative to duration, specific sectors between treasuries, agencies, all of those approved investments per California code and per your investment policy, and then understanding the market as well. What is the most appropriate based off the market environment that we're in? And for over 3 decades, we've invested in multiple different types of market environments and even challenging environments like we're in today. But that ongoing management is also providing with our own in-house credit analysis, where we're doing our research on issuers and understanding those with those financial institutions, making sure we're doing our due diligence on broker-dealer relationships, but having a disciplined approach that are following those tenets of safety, of liquidity, making sure we're honoring the objectives that are put forth in the investment policy, while also making sure we're generating a risk of market yield and return for the portfolio, but making sure it's still in compliance, as Don had alluded to. And if we actually go to the next page, once we've built this and having this discussion and working with staff, what we want to do is understanding and pretty much bifurcating the portfolio for liquidity needs versus a core portfolio. So once we understand what I alluded to earlier, talking about a cash flow analysis, understanding what the liquidity needs are and taking advantage of some of the benefits that LAIF, some of the local investment government pools can provide, that we could be able to provide for a liquidity component for needs over the next 12 to 18 months. But then once that's discussed, having the remainder amount of that portfolio in a sense of a core portfolio, looking at a higher duration to be able to allocate those resources to a longer term portfolio, incorporating securities that are allowed by code, as I mentioned before, treasuries, agencies, corporate bonds. We made a recommendation to incorporate supranationals, which is another permittable investment per California investment code, but utilizing what's available, in our toolkit to be able to put forth a portfolio to be able to maximize the return while maintaining the risk components, and as well making sure it's in line with California government code, as well as in line with your investment policy. I think that's the most important, to be able to enhance both of those, but bifurcating the portfolio to be able to take advantage of, in a sense, right now, what we're seeing is a steepening of the yield curve to be able to take advantage of some of those higher yields in and around that 3 to 5 year mark along the yield curve inside of what's permitted by the policy and per code. We've done this and we have historical precedents doing this over 3 decades. And if we actually go to the next page, what this actually shows is 2 types of strategies that we generally work with hospital agencies, as hospital districts, as well as with public agencies, is putting together a focus of a consistent return, a consistent approach, focusing on what we call the 4 pillars of fixed income portfolio management, which is managing the duration of your fixed income portfolio, focusing on what's the most appropriate sectors based off of market movements, and understanding where along the yield curve we want to be able to sit there and execute those specific securities, and then also doing the individual research on the different issuers, making sure we're optimizing and making sure we're maintaining the risk parameters. And I know I said this a couple of times, but we view portfolio management as risk management. And what we have here is 2 of our strategies that generally focus on a 1 to 3 year component, which is more of a conservative type of portfolio, or a 1 to 5, which actually, again, takes advantage of the full breadth of what's permitted per California government code. Now, we call our 1 to 3 year strategy the limited maturity. And as you can see here, going back, shows performance numbers with net of fees versus a specific benchmark, versus that 1 to 3 year ICE BAML US Treasury Index. And you can see over the 1 year time period, 3 year, 5 years, as well as since inception, going all the way back to 1988, when we started the strategy, has beat the benchmark over those different time frames, as well as with our short-term bond strategy, which is more consistent with a 1 to 5 year approach, following a benchmark of a 1 to 5 year US Treasury and agency index. As well, you can see over those 1, 3, 5, 10, and since inception time periods, beating the benchmarks over those different timeframes. Now, the difference between the 2 strategies, a 1 to 3 and a 1 to 5, is in the sense that 1 to 5 year strategy goes and takes advantage of, you have a longer duration strategy that, again, can take advantage of what's available per California government code at the longer in the yield curve into that 1 to 5 year component, whereas that 1 to 3 year strategy stays a little bit shorter. However, over time, comparatively to LAIF, as we can see on the next page, has actually done comparison fairly well versus just sitting in a government pool. and the benefits that we can provide, and we have. So what this shows is going back 10 years, what we've done is we've compared a 1 to 3 year strategy and a 1 to 5 year strategy to what you would have what the return would have been comparatively just leaving in LAIF. So over that time period, LAIF, as you can see, with a portfolio duration of 0.6 years, had an annualized total return of around 85 basis points, net of a 12 basis point fee. And what we've done then is compare what the 1 to 3 year or 1 to 5 year strategy would have done at that same time period. And as you can see, the 1 to 3 year strategy had an annualized total return of 1.42, better than that 0.85 that would have been in LAIF, with added value of an excess return net of fees over LAIF of 3.2 million. And then compared to that 1 to 5 year strategy, which has a longer duration of 2.5 years, had an annualized total return of 1.81%, providing us excess value over LAIF of 5.5 million. So those different strategies are what we're managing to for public agencies. Again, what these numbers are, they are the composite of all of the type of strategies we're managing for our clients that fall within those duration metrics for our specific clients within those different ones. So all of the strategies that have a duration around 1.8 years are in that limited maturity strategy. And for those that have a duration around 2.5 years fall into the 1 to 5 year strategy or our short-term bond strategy.
And this really goes to the heart of what Crystal had mentioned at the beginning of the call, is that at one point you need to really look at some opportunities that can bring you additional returns over what you're able to get in the local agency investment fund.
And especially in this environment today, where the local agency investment fund is providing a yield of actually 29 basis points, 0.29. And we expect that to continue to go down to get into the low 20s, possibly by mid to end of the summer as well. With that. And so any questions about anything that I just gone over on our investment process on Chandler and our firm before we kind of touch on some of our observations with the investment policy? Looks like Dale might have a question.
Yes, I do. I was the CFO for a family business, and I used to regularly go down to the bank and purchase 30, sometimes 30-day, 60-day, 90-day commercial paper, just taking advantage of any funds that we had laying around. So I recognized the value of it. I remember taking a postgraduate class in fund management just to bring myself up to speed on this issue. Now, mind you, this is back in the 80s and 90s, so it's quite a while ago. But I'm also remembering at one time, Orange County owed us a significant amount of money back in the 80s, and they got into junk bonds, Michael Milliken's junk bonds, and filed for bankruptcy. And my recollection is it was a Chapter 11 reorganization and not a discharge in Chapter 7. But so we eventually got our money, but nonetheless, I guess some of these California regulations on governmental agencies or quasi-agencies required them to make a little safer investment so that that Orange County experience wasn't repeated. Can you talk a little bit more about what the government regulations actually say and do to protect us from investments that might fall out of place?
Sure, I'll be happy to. And the genesis of a lot of the regulations that are established in 53601, which is the government code that regulates the investments for public agencies, came from the challenges from Orange County in the mid 80s. And I know Kay Chandler, the founder of Chandler Asset Management, I know did have some influence and input into some of the recommendations that are set forth in 53601. So first off, 53601 limits the investments for public agencies to investments that follow the concepts of safety and liquidity. So in a sense, not assuming any additional risk. And there's limitations, first off, in terms of the length of term that's available for those specific investments. Okay, first off, you're not allowed to invest in any paper greater than 5 years, okay, without board approval. So you do have the ability to invest in treasuries and agencies, in a sense, US government-backed instruments. You can go out to greater than up to 10 years if a board or a council approves it, but you cannot then purchase those until 90 days after that approval. But the majority of limitations are, in a sense, are purchasing bonds with a maximum maturity of 5 years. You cannot purchase bonds greater than 5 years. So that's the first limitations in terms of the term structure. Then the other limitations set forth are what type of investments, okay? The specific types of sectors that you can invest in. And those are following very, very high quality investments that focus on those tenets of safety and liquidity. So you're talking about US treasuries or instruments, debt instruments of the United States government, debt instruments of agencies, Fannie and Freddie, so agency debt as well. You're allowed to purchase municipal bonds and of issuers in the state of California, but also you're allowed to purchase state bonds of the other 49 states in the United States. It also allows for the purchase of corporate notes, so long though as they meet a minimum rating requirement of A or better by one of the 3 major rating agencies, national rating agencies, national rating organizations. So that's another area that California code provides restrictions on, is the credit quality of specific instruments, okay? So certain instruments like corporate notes, other instruments like pass-through securities, mortgage-backed securities and such, and also bankers' acceptances and other types of mutual fund investments have specific rating requirements where they must meet a minimum rating requirement in order to be a permittable investment. So for corporate medium-term corporate notes, they must be A-rated or better. For pass-through securities like asset-backed securities, they must be AA or better. And so the code goes through and limits pretty much what the investable universe is. And a lot of times we'll get questions of, well, how come we can't go invest in, I'll be honest, this question's come up recently, Bitcoin or other types of equities. And it's because of the risk parameters that are established. And those are quote unquote viewed as riskier investments. And why bonds are viewed as something that's more appropriate is because if we even look back at a 1 to 5 year treasury strategy going back 30 years, the negative return for a 1 to 5 year strategy had going back, I believe 30 years was minus 0.63%. So historically, bonds do not have the same level of volatility relative from a return perspective that other types of investments do, like equities as such. And so that's why those are not permitted by California government code. Now, California code does do reviews on an annual basis to update code to adjust the percentage of investments that could be allowed as well. So other limitations that are established by code is the maximum allowable allocation that a public agency can have in one specific type of sector. So again, give you an example, medium-term corporate notes. The maximum amount of exposure that you can have in your portfolio, medium-term corporate notes, is 30%. You cannot go above 30%, or therefore you're violating code, okay? You can also have limitations. This past year, they updated the language for public agencies with greater than 100 million of investable assets are allowed to increase their allocation for CP, for commercial paper, from 25% to 40%. And that'll expire in 2026. But also reviewing other types of investments that are allowable. In 2013, California code approved the inclusion of supranational debt. Supranational debt is bonds that are issued by a multi-government organization coming off of the World Bank. So it's actually debt that's utilized for projects to be able to sit and help with development projects in third world countries. That debt is actually backed by the US government, Canada, Japan, UK, European Union, and therefore that debt is actually rated AAA. So that's another type of investment that was actually approved for usage in California government code in 2013. And so there's time from time where California code will actually review what's permittable from an investment standpoint. And so generally, I think the restrictions set forth are based off of what type of investments are, the credit ratings, and the maximum allowable that you can have in your portfolio are pretty much the 3 areas for that.
Right. Christopher, I appreciate the diversification on a sector basis. For an individual client, are there diversification rules that apply so that no one client has too much in the, even though they may have 30%, or could they all be in treasury bonds or other single instruments, or is it somewhat of an indexed fund?
No, so there's other limitations that are actually set forth from a best practices perspective on, and this is where we would make recommendations to limit the maximum amount of paper for one specific issuer. So in a sense, you don't want to have, just give an example for corporate notes. You don't want 30% of your corporate notes in Apple bonds. Even though it's a quality company, so we've set forth limitations that you want to set forth that make sure that the maximum amount of exposure for any given issuer is 5%. That's our recommendation for best practices. We see sometimes investment policies have limitations around 10%, excluding things such as agencies and US Treasuries. So we have, and the limitations for exposure from a concentration perspective generally are not set forth by California government code outside of those maximum allowable per specific approved investment, but more the limitations come from individual entities' investment policies about what limitations. So we actually see policies that are then more conservative than California code, some of which limit the maximum exposure to corporates to 20%. Some of them don't even allow investments in some other types of that are approved per California government code. And so therefore the investable universe then shrinks. So it's all based off of the individual client themselves about what they're comfortable with. And so therefore you can see generally 50, 60% of a portfolio in agency bonds and treasury bonds. But therefore we actually recommend the diversification of incorporating all of those permittable investments per code into the portfolio. But generally what you'll see is for some of those that are more quote unquote viewed as risky that are provided per code, you generally do not see anywhere above 10% of generally a client's portfolio in things such as pass-through securities, supranational debt. Just trying to think of some other examples of that as well. But you'll see a majority in agencies and treasuries.
Okay.
And these are all things that we addressed in the investment policy and you'll be taking a look at here in a bit.
Okay. Thank you.
All right. Any other questions, or should we move forward with some of the recommendations for the investment policy, kind of the conversation that we just had with Dale? So part of our recommendations are there, and it comes back to making sure that we view portfolio management as risk management. And we want to be able to enhance the risk management language of the investment policy, again, to keep it in line with California government code, but also to be in line with CDAC, the California Debt and Investment Advisory Commission, and CMTA, the California Municipal Treasurers Association. Our goal is to be able to have our clients get recognized for their investment policy by CMTA. They can actually provide a certification for the investment policy meeting the guidelines set forth by the California Municipal Treasurers Association. Our policy, first off, the policy was strong. There's a lot of, especially with regards to the language of authorized investments. We did just have a couple recommendations as, again, incorporating supranational securities as one of the permittable investments, making sure that we're updating the maximum maturity range to 5 years. Inside the policy was written that the maximum maturity allowable is 1.5 years. And so to be able to take advantage of the full breadth and scope of what's permitted by California government code, we actually recommend to update that to 5 years, as well as updating some of the language related to money market funds. That's more so from a best practices perspective. And then finally, incorporating language that was added to Senate Bill 998 that was passed in January that actually permits the incorporation of zero or negative returning or interest-bearing securities so long as they are backed by the United States government. And that bill and that language actually expires in January 1, 2026. So there is a clause to that, especially with that California government code. But those are the recommendations we recommend from an authorized investment standpoint. But also we made recommendations to update some of the language regarding the scope, the pooling of investment funds, the investment policy review, as well as safekeeping and custody, and then adjusted some of the language relating to the delegation of authority and reporting requirements, again, to be in line with best practices established by CDAC and CMTA. And then finally, what I think is important is, as I've talked about, the program is built on risk management. In our reporting on a monthly basis, you will get a summary of the portfolio, of the breakdown from a performance standpoint, the sector allocation. You will also get a page in there that shows that the portfolio is in compliance with the investment policy for the district itself. So this is a sample investment policy, giving you idea of all of the available approved investments on the left-hand side. The center column are those specific restrictions that we had just talked about relative to maximum credit rating or allowable issuer limitations and or the maximum amount of allowable investment per the policy and whether or not it complies. We actually have a process. Our compliance department is completely separate from our investment management department. And what we do is we actually input all of the parameters established by the investment policy into our own trading platform. We use Bloomberg AIM Analytics for trading. What this does is this limits any of our portfolio managers from making a recommendation that would put the portfolio out of compliance. So there's multiple levels and checks to make sure that we're meeting the guidelines established not only by California code, but also making sure that the portfolio is in compliance with the investment policy. And I actually think this is one of the most important pieces that we do from a fiduciary standpoint, making sure we are honoring our fiduciary duty and enhancing the fiduciary duty of the board to make sure that the portfolio is in compliance with the policy and as well as code. Any questions about those recommendations or anything that we've covered that Don and I could add a little bit more clarity to?
Art, did you have any questions? I know that you had spoken to or had emailed Crystal. Were those specifically for her, or did you want to ask any further questions of the Chandler representatives?
They were mostly about the background, about why we were having the meeting and everything that led up to this. The one thing I noticed on the rate of return, the rate of return since inception is quite a bit higher than the 10-year rate of return. And I just wondered, yeah, the far right-hand column versus the one next to it, and why those differences are so large.
You've got an interest rate policy or interest rate scenario over the last 10 years where you've seen exceedingly low interest rates. You think about, just your own home mortgage rates and where they've gone in the last 10 years. Back in the when these were, incepted in the late 80s, mid 90s, just the available bonds and the interest that they were yielding was just significantly higher. That was the generator of those differences. So if you go back to pre-2010, or actually pre the credit crisis that the country went through in 08 and 09, interest rates have never recovered to the same level that they were prior to that.
Okay, that's what I thought, but I wasn't sure. Thank you. That's all I had.
Thanks, Howard. Any other questions from our board?
Mary, I have a question. What portion of our reserves are we talking about moving into professional management?
So Crystal, if you want to take that, I know that is some work that we'll do with Crystal, and kind of, we talked about liquidity forecasting and those kinds of things, just to make sure that you've got enough of that liquidity that is readily available, and then we would manage the rest. There's a little bit of art and science in that to make sure that you're getting the most out of your investment, but keeping that liquidity to the place that you need it. And Crystal, I'll hand it to you.
Yeah, that's exactly right. So Mary, what I'm going to do is be sitting down with Chandler to kind of review where we think our cash needs to go in the future, tying it and looking at the master plan, looking at our capital investment timeframes, making sure that some of the investments have the quick liquidity that we may need if necessary. So the overall total amount I don't have right now because we haven't been able to sit down with Chandler to do that work yet. But clearly that's something I can share with you, the board, as we work through our process with Chandler, making sure that, maybe a certain amount needs to stay in lay. We always want to honor our policy when it comes to U.S. Bank and our operating cash position. So we'll maintain that. We clearly have the Medicare advance payments that we received that were retained to the Medicare program. We need to make sure that can still all happen. So it's all going to be a balancing act with our cash requirements as we move forward.
Great, thank you. Thank you, Crystal.
And one of the other kind of things that we can provide, and a hallmark of the portfolio that we manage, is there's always a base of treasury securities in the portfolio, which are very marketable. We can, you know, if the unforeseen happens, we can turn those treasuries into cash in a day or two, and get out of those securities and present the cash to you. So there is that additional buffer with owning treasuries as well.
And then Crystal, I have a question in regards to doing this investment. Will it help, hinder, or do nothing in terms of our looking at an A- grade bond?
Well, obviously, the more cash you're able to keep, which is one of the ratios that are looked at, the ability to generate additional investment income on that cash position only helps us build our cash position. So the more we can earn and the more we can, you know, retain and concentrate on the timing and maximizing those investments can only help us. So actually working with a firm, I'm not sure how S&P or Moody's would view that, but I can't see it being negative in any way. So
Okay.
And we've worked with a number of our clients as they've gone through those processes with one of the rating agencies, the S&P or Moody's, and been part of some of those meetings to help them understand your credit worthiness as well. So that's something that we can absolutely help with.
And in providing the services to the district, what does Chandler base its fees on? Or how are your fees calculated?
So our fees are based on assets under our direct management. So the assets that you would have us care for would that's where the fees would be billed on, not on, you know, so if you, whatever part you have in your liquidity portfolio or at LAIF for your bank account, we wouldn't, you know, no fees are charged on that. We will only charge on those under our direct management.
So Alice, the next item on the agenda, which was in your packet for review, was their agreement. And in that agreement, under item number 2, does break down their management fee on a basis point of view. So the first 25 million, the next 25 million, and then in excess of 50 million, those fees go down the more under management.
Don, a question for you. Your other hospital clients, do they give you their entire excess cash, or do they also maintain a LAIF balance?
Yeah, almost every one of our clients has money with LAIF. We are fans of LAIF. We think it's a great tool to manage liquidity. And yeah, almost, I can't think of any that don't utilize LAIF or some other LGIP product to help manage that cash. No, we you know, and quite frankly, we have had instances where somebody wants to give us some additional funds to manage. We've told them that they would be better off having that in LAIF. We are fiduciary. We want to do what's right for our clients, and if we think that the money is better in LAIF than with us, we will not hesitate to tell you.
Okay, good.
Are there any
Crystal,
limitations on the investment income, or is it our cash to do whatever we want? I know there's limitations on what we invest in, but with the greater returns, I mean, it could add up to, you know, million plus, depending on, you know, how much we put into the funds. But is that, it just becomes our cash, or are there any limitations on how that money's spent?
That is your money.
Okay.
It's always your money. Yeah, it's always all your money. So yeah, there's no limitations whatsoever.
So Crystal, this is Art. I see you've already signed the asset management agreement in May, and you know, we have a board resolution. So what's the difference between you signing the agreement and the board resolution?
So the resolution is basically allowing the board to give the authority to Chandler, the CEO and the CFO, to make investment decisions on behalf of the district. So
Okay.
that is what the resolution is doing versus the contract, which holds Chandler accountable for the services they're providing. It specifies the fees, the terms. It's our agreement. So it's an agreement versus an authority.
Okay, all right, thank you.
Okay, I think that's pretty much all the questions the board has.
Great.
So should we move on then, Crystal, to the resolution?
Would you
If
like
the board would like to, yes.
would you like us to drop off at this point, or should we stay on?
Are you asking me or Crystal? I'm sorry.
Yeah, either of you. We don't want to intrude.
So I would say I don't see any conflict with you staying on. We're a public entity. It's a public meeting, so any decision's public anyway. And on top of that, we still have the investment policy to cover, so it'd be wise to go ahead and have you remain on the meeting.
Perfect.
Thanks, Crystal. So do you want to present the resolution, Crystal?
I can. Martina, would it be easier for me to project it or you?
Sure. I just made you the co-host.
Okay. I will share my screen. Give me just a second here. Okay, so are you able to see the resolution before you? I'll make it a little bigger. I know as I'm growing older, I'm appreciating large print.
I'm not even old yet.
It's fine, Crystal, we can read it.
My
And those who
eyesight
are
is-
older have glasses now.
I'm still relying on my contact lenses. I haven't quite moved to readers, but we're getting close. So the resolution before you basically authorizes Chandler as our investment firm, as well as in this section, the President and Chief Executive Officer to execute on behalf of the district investment management services for our operating funds. The CEO would also have the ability to designate this to whomever, more than likely if Harry will designate me as another participant with Chandler to do the investment management services of our operating funds. So this is just a formal way of you granting the authorization to Harry, his designee, and Chandler to provide investment management services to the district.
Okay. So does our board members have any question about the resolution? Crystal, in terms of Chandler and those designees discussing the management of the funds, how will the board be involved in anything further other than getting reports?
Well, your investment policy is designating what I can and can't invest in with Chandler. So the policy is going to dictate the guidance by which we operate by. We also have our policy that requires 30 days cash on hand in our U.S. bank account. So you are protected by those policies as we work through how our investments happen, and then you get your updates through the reporting.
Will that policy also establish a proportion of LAIF versus other investments?
No, that's going to be part of the advice we'll get with Chandler.
Okay.
Do
But
I have any?
we'll see what the result of that is in the reports that we get, obviously.
Yeah, the policy does say that we'll receive monthly reports and quarterly reports. So I'm assuming that'll be part of your financial package each month, Crystal?
Yes.
Okay.
Yes. So I will work with Chandler to make sure we have those reports that provide the information to, obviously through Finance Committee if we happen to have a committee meeting that month or quarter, and then coming up through the Board of Directors as well.
Any other comments or questions?
Just
Matt?
one quick, so this is the first time we've used an outside investment management firm.
That is correct.
Okay.
We've been able to, we've done most of our investing through LAIF. They've actually produced a pretty decent return over the years that we've been with them. And it wasn't until we hit the ceiling with LAIF which was the 65 million, and the advice that we had received prior to that, which is, you know, a lot of investment firms don't really want to look at you so much until you kind of have something to work with. So once we kind of hit that 65 to 70 million dollar mark, where we had some ability to invest some things a little more than just being liquid, put us in the position to now work with an investment firm.
Okay.
Don, out of curiosity, do you work with any other rural hospitals?
So yes, we work with, well, another district would be Palomar Healthcare District in San Diego. And then on the rural side, Chris has a relationship with an interesting organization in Nevada.
Yeah, the Nevada Rural Health Partnership that is based in Reno, that I know we work with them and their group Lycon as well.
Yeah, I'm on board. Whoops. Well, Crystal, you know, I've always I've nudged all of us along the way as our cash reserves grew. You know, I'm mindful of the late Senator Everett Dirksen, who said, gee, $1 million here, $1 million there. And the next thing you know, you're talking about real money. I am really a huge fan of investing these and picking up some additional funds as our money sits in the bank. So I think it's great.
I'm hoping also that this is a mechanism that can assist us with our other entities, such as our foundations, which I haven't had a chance to really talk with Dawn and Chris about, but it's been in the back of my mind that, you know, like you said, $1 million here and $1 million there, you take it, put it together and you can get a lot more. So, we'll look at that option as well.
If there are no further questions, do we want to present the resolution to the board or a motion?
Yeah, you should take some public comment and then you can ask for a motion at that point, I think.
All right. Is there any comment from our audience regarding the investment service?
Let me, if I could, make one comment too about the fees. Vanguard short-term bond index fund right now is, their management fee is 7 basis points. So this investment management fee of 10 basis points and then down to 8 is certainly within reason, considering the additional services that we'd be getting. I just want to assure the board of that too, in case you're not current on, because Vanguard is, you know, typically the lowest. Am I right, Don, Chris? Yeah, advertised as the lowest in investment fees, but it seems to me like we're getting a lot more service for the slight additional basis points.
Thanks, Dale, for that input. I didn't hear anything from our audience. So can I have a motion to approve the resolution as presented?
So moved.
And a second?
I'll second. This is Art.
Okay, it's been moved by Director Shamlin, second by Director King to approve the resolution. And I'm sorry, I don't have it in front of me. Is there a number to it, Crystal?
2021-01.
Thank you so much. The resolution as labeled. So Martina, will you do a roll vote, please?
Director McGarry?
Aye.
Director Shamblin?
Aye.
Director King?
Aye.
Director Brown?
Aye.
Director Wong?
Aye. So the resolution is passed, and we look forward to hearing more about our work being done between Crystal, Harry, and Chandler. So thank you very much for that informative presentation. And thank you, Crystal, for the work that you've done
Nice.
in order to help our district. So Dale, did you want to say something?
No, I just want to say kudos to Crystal for putting this together.
Yeah, absolutely. So
So the last piece I think we need you to do is the policy, which will set our guidelines. But thank you for this comment. I appreciate that. It took a while to get through all the interviews and to get comfortable with what we were doing. So, and I do want to thank Harry for participating as well. You know, I've never worked with an investment firm either, so this was a little bit of a new step for myself. And Harry was a seasoned CFO prior to CEO, so his experience came in quite handy. So thank you, Harry, for supporting this as well.
okay, so then on with the policy.
Yes, please. So,
Do you have the policy up? Can you put the
so,
policy up?
Oh, sure. Would you like the red line or the clean? Because the red line's pretty.
Yeah, the clean one would be best.
Yeah, I'd go
And then
with
you
the
can
clean
just
one.
point out where the changes have been.
Oh, throughout the whole thing.
Every paragraph.
Well, no, just,
Yeah.
No, it's lengthy.
why don't you do it the best you can, Crystal? Because I know you'll let us know what's important.
Yeah, I think we'll just do the red line version if you don't mind then, Alice.
Okay.
I think it'll just be easier to do that way. So give me just a second. I will pull it up.
And if I could just make a couple comments as we kind of review these investment policies. Again, myself and other members of the investment management team reviewed this. And generally what we're looking to do is just enhance some of the risk management language for the policy, as well as making sure it's in line with best practices from CMTA and CDEC as we made these recommendations.
Oh, great. Okay.
So before you is the red line policy. I had requested Chandler to take our existing policy and redline it so you could see the changes that they were recommending to update our policy. We did have a few things that were out of date, like the FDIC limits. There was also the ability to go from 3-year investments out to 5 years. So those were some of the definite changes of just kind of the age issue we had with our policy versus bringing in even newer information that came about on January 1 of 2021 that they've also added to the policy. So with that, I really relied on their expertise to update this and adding language like they stated to make sure we were in compliance as much as possible with the government code section, and that all the investment options that we had available to us were identified, and that the term of the investment, this is where you can see we extended it out to 5 years, which is allowed now. And then we also added a lot of the reporting language. So you would always have the required monthly and quarterly reports to update you on what our investments were doing. We did not have that in our policy before. How often we would review the investment policy. And then we also get into some areas of new language, new definitions. We didn't have the definition section at the very end of the policy, so any acronym that was used was not clearly defined. Custody, safekeeping, that was updated. And as we get towards this latter section, this is where we get into the glossary. So it really helps anyone who were to pick up the policy understand exactly what the investment terms are. And the remainder part of the policy is just that. It's the glossary of terms for investment. So I think they did an excellent job of creating a way to show you the updated language in our investment policy, and then gave you the clean version too, so your eyes can go totally cross-eyed when you try to read through it. So we will continue to review this policy and update it as regulations change or the government code section changes. But this gets us as current as we can possibly be.
Does our board have any questions regarding the policy ABD 15 on investments?
Yes, question for Don and Christopher. Is there any auditing requirements for your organization?
So we are highly regulated and are overseen by the Securities Exchange Commission, among others. We do self audits. So the SEC has at their discretion are able to come in and take a full review of our books and records and everything. It's been a long time since they've done that. They're a large government agency, and we have not just kind of filtered up through. We continue to expect it in any minute. But we do our own annual audits and mock SEC reviews and are pretty thorough. I've worked for a handful of companies in my career, and the kind of culture of compliance at Chandler is truly kind of second to none. But yeah, we are again highly regulated and are reviewed on a regular basis. Would love to have, and in fact, Crystal, we will introduce you to our president and Chief Operating Officer, Nicole Dragoo, who I think you've interacted with a little bit, and can answer any questions about kind of the hoops that we jump through on an audit and a basis like that.
Crystal, did legal counsel also review all these policy changes?
I had Matt Moucher review the contract, but he did not review the policy.
Okay.
I did review the red line before this meeting.
Oh, you did? Good.
Yeah.
Great. Thank you.
Thank you.
I didn't have any issues that I needed to raise.
Okay.
So the policy says we'll get an annual report. I'm assuming that'll be at a board meeting and that somebody from Chandler will be there to give a report.
We'll be there whenever you want us there. Our clients, we have clients that rely on us, in-person meetings very regularly, or down to annually. Kind of a quarterly is where it seems to kind of wash out at. But we are happy to to be on premises, on site, on a Zoom call whenever you need us.
I think that would be helpful.
And who from Walnut Creek doesn't want to come to Tahoe anyway?
Our CEO has been a longtime property owner and of Truckee, and he has spent much of the pandemic, along with a lot of other folks from the Bay Area here.
Yes, we know.
Much of the pandemic in.
We know.
We've met them all.
Yeah, we've met them all. Right.
Sorry about that.
Yeah, that's right. Okay.
Does our audience have any questions about the resolution? Or I'm sorry, the policy? Okay, seeing that, can I have a motion to approve the policy as revised of ABD 15, Tahoe Forest Hospital District Investment Policy?
Move
So
approval.
moved.
See,
Oh, go ahead, Mary.
So Mary, are you
yes,
making the motion?
move that we approve the policy.
Could I have a second, please?
I'll second, Michael.
Okay, so been moved by Director Brown, seconded by Director McGarry. And Martina, will you do the call of the vote?
Director McGarry?
Aye.
Director Shamblin?
Aye.
Director King?
Aye.
Director Brown?
Okay,
Director Wong?
And the policy is approved as revised. And I think that is the end of our content for this meeting. Correct, David? We're ready to adjourn?
Correct.
Okay. So thank you all for coming to the meeting or attending the meeting. Thank you, Crystal and Chandler Investments, for coming and talking to us. And we look forward to hearing reports on how well our investments are doing. So thank you again, and the meeting's adjourned.
Thank you. Thanks, Alice.
All right.
Thank you, everybody.
Bye, everybody.